Ever thought about, like, buying that cool little bookstore downtown? Or maybe finally launching that big idea you've had brewing?
Yeah,
It's exciting to think about, right?
totally.
But then there's that voice, the one that says you need, like, a treasure chest full of cash to even get started.
Right. You think you need millions.
Exactly. So today, we're busting that myth. We're diving deep into creative financing for business acquisitions, and honestly, it's way more interesting than that sounds.
Definitely.
Our guide is this article by M.D. White. He's been in mergers and acquisitions for over 25 years, knows his stuff.
Wow, a veteran.
He calls it the art of creative financing.
Okay, I like that. The art.
After reading it, I get why. This isn't just loans, it's strategy.
And what's fascinating is how many ways you can actually buy a business. Everyone gets stuck on the price tag, but it's not always about having a pile of cash ready to go.
That's what I found so interesting. M.D. White really opens your eyes to the possibilities, like leverage buyouts, LBOs. Sounds intimidating,
It does.
but it's a classic example of creative financing.
It is, and it's a lot like getting a mortgage. You're using borrowed money, often a lot of it, to buy something way bigger than your initial investment. And just like with a house, the business itself becomes collateral.
So you're using the company's potential to, like, secure the funds to buy it?
Exactly.
That's kind of a power move.
It can be. It lets you control a company with less upfront cash, but, and this is key, MD White stresses due diligence. Big time.
What does that mean exactly?
Like you wouldn't buy a house without an inspection, right? Due diligence is that inspection, but bigger. You're checking financials, but also the management, the culture, the competition, everything, to make sure the business is as healthy as it seems.
So it's not about getting a company for cheap.
Not at all.
And this is where investment relations come in, right, from M.D. White's article.
Exactly. He says building trust and communication is key. You need to get the seller's motivations, their vision. Do your goals even match? It's more like a partnership, which is so important for a smooth transition and a successful acquisition.
Makes sense, because a business isn't just numbers, it's people and ideas.
Absolutely.
Speaking of relationships, what about seller financing? Sounds almost too good to be true. Borrowing money from the person you're buying from.
Right. It seems counterintuitive, but it can be a win-win. Imagine, instead of going to a bank, you work directly with the seller. They become the lender.
So why would a seller go for that? Why not just take the cash up front?
It often means a better return in the long run. They get steady income from the loan, often with interest, which can be more than a traditional sale.
And for the buyer.
You keep more of your capital up front, which gives you more flexibility early on, especially when you're figuring out how to integrate the new business. Plus, it builds trust and collaboration, just like MD White talks about.
Okay, so we've got leverage with LBOs, a more collaborative approach with seller financing. What other creative financing tools are out there? So interesting. It's like teamwork from the get-go. Okay, so we talked about LBOs, seller financing. What about this equity swap thing M.D. White mentions? I'll admit, I had never heard of it before.
Yeah, it's more common with mergers. Instead of one company buying the other with cash, they swap shares, kind of like
Trading?
exactly, like trading cards, but with parts of their companies. They both become owners in this new combined company.
So instead of one big check, they're like, let's team up, combine forces.
Exactly. And MD White says this is great when both companies have something unique to offer.
Like one has the brand, the other has the tech.
Yeah. They each bring something to the table, leverage each other's strengths, and become something bigger together.
And that probably feels less risky than a straight-up acquisition, right? Especially if one company's worried about absorbing the other.
For sure. It spreads the risk, encourages collaboration, a long-term view. It's building a partnership, which again brings us back to MD White's point about investment relations.
Right. It always comes back to that human element from the beginning to the very end.
Exactly. It's something he emphasizes throughout the article. He even compares buying a business to adopting a plant.
Wait, what? Okay, now I have to know where this is going.
You're bringing this new thing into your world,
I
right?
guess so, yeah.
It needs the right environment to thrive. Like a plant needs good soil, the business needs a supportive culture, communication, a shared vision.
To help it grow, basically.
Exactly. And that's why post-acquisition management is so important. MD White talks about clear communication being super key, both for the employees of the company you're buying and your own team. Change can be scary, right?
Oh, absolutely. Merging teams, new bosses.
Right. So addressing those concerns openly is huge.
You're basically blending two different cultures, different ways of doing things, and everyone needs to be on board.
Exactly. And strong leadership is crucial. You need a clear vision for the future, shared goals, show everyone how they fit into the big picture.
Make everyone feel valued, especially during all that change. So it really is about open communication and respect at every level, from that initial due diligence to working with the new team.
Absolutely. And that's what MD White really hammers home.
Yeah.
Building that trust, those strong investment relations right from the start, that can make or break a deal. It's the difference between an acquisition that helps everyone grow and one that just fizzles.
It's like you're building a new team, and you have to be the coach.
Uh,
Help them be their best in this new setup.
exactly. And MD White actually talks about this. He calls it the art of integration. It's more than just combining departments or whatever. It's about bringing different mindsets, skills, personalities, everything, really, together so that it all works.
So the deal is just the beginning. The real work comes after.
Right. He's big on this thing called synergy mapping.
Synergy mapping. Okay, break that down for me.
It's finding those areas where the two companies actually make each other stronger, where the sum is greater than the parts.
So it's not just about saving money or cutting overlap. It's about finding those hidden opportunities where putting these two companies together sparks something totally new.
Exactly. Like each company on its own, they could only go so far. But together, boom. It's about understanding not just the numbers, but the people, the culture, the potential within those teams.
Which takes us right back to creative financing. It's not just about being able to afford to buy a company. It's about knowing how to make a deal that works for everyone, one that sets you up for success from day one.
Absolutely. LBOs, seller financing, earnouts, equity swaps. MD White really shows how powerful these strategies can be. They're not just financial tools, they're ways to unlock growth and opportunity for everyone involved.
I think what's really hit home for me, and hopefully for everyone listening, is that acquiring a business is about so much more than just money. It's about having a vision, working together, understanding what makes people tick,
Yeah.
and ultimately creating something new and valuable.
Couldn't have said it better myself. It's like in business, like in life, the best things come from those moments of real transformation, not just transaction.
Well said. And that wraps up our deep dive for today. We covered a lot of ground, from the ins and outs of creative financing to the crucial role of investment relations and post-acquisition management. Hopefully you're leaving today with a whole new perspective on what it really means to buy a business. It's a lot more than just having a big bank account.
It definitely is. Hopefully, this sparks some ideas, whether you're an entrepreneur or just curious about the business world.
Maybe you heard about a strategy you'd never considered, or even better, feel ready to explore some of those what-if ideas you've had.
Whatever your takeaway, we hope you learned something new and feel empowered to look at business with a more creative, strategic, and human-centered perspective.
Because, like MD White says, the most successful businesses are the ones that get that it's not just about the money, it's about the people too. Until next time, keep exploring, keep being creative, and keep diving deep into the world of business.